Welcome. My name is James Sackey. I'm the marketing director for the Bank Group and your host for the Quarterly Deal Pulse, where I'm interviewing top deal makers.
So I'm a partner with Blank Rome.
So in Escort, we are a direct lender.
For their insights and their feedback.
I think on some of the sell side, you've got some companies that are in a little bit of trouble now.
On what's going on in the transaction world. Let's get to it. Thank you all for joining us today. I am joined by Samuel Criales. He is Vice President and Senior Business Development Officer at First Internet Bank. Samuel, thank you for joining us today. Tell us about yourself and tell us about the bank.
Yeah, thank you, James. Appreciate it. Thank you for having me. Love to chat with you and tell you a little bit about myself and the bank and kind of the state of the SBA acquisition world. Sam Criales. I am the vice president, mostly of business development. I specialized in business acquisitions from say $500,000 to $5 million. I have been doing SBA lending for the past 8 years. Started doing pretty much everything SBA related. And in the past 3, I've specialized just in M&A work. And I've probably closed in the past 3 years over $160 million in acquisitions. Very familiar with the process, very comfortable, and work with First Internet Bank. We are based out of Indiana, and the bank has been doing SBA lending, I want to say, for the past 5 years. We joined the top 10 SBA lenders last year. I believe we closed around $400 million. That's probably been our best year. And looking to grow. And I think this year we're in target to do 500 to 600 million. So that's pretty much it for now in terms of my background.
Awesome. I know we've done a lot of business with between you and the Van Group. So I know everyone appreciates that. We'll love to keep that relationship going, of course. So let's get right into it. What are you seeing right now in the deal flow? Are transactions increasing, decreasing, or are they kind of stagnant?
Deal flow is very strong. I'm looking at an average of about 15 to 20 deals per week. And so definitely getting a lot in front of a lot of clients, reviewing financials, reviewing transactions. And so I would say it's probably the busiest it's been in a very long time. I have closed year to date about $18 million and it's been all M&A work. So like I said, very strong. I have about $40 million in underwriting right now. So on target to probably be at about around $60-70 million in closed transactions this year. So I can personally tell you that, yes, the market is strong and lots of people buying businesses and lots of sellers. And market is very good.
That's awesome. That's great to hear. I'm glad business is flowing very well this year. I know there's been a lot of uncertainty and tentativeness around in the market from the change in administration. Q1 was a little bit crazy. So that's good to hear. So let's talk about buyer expectations or some of their behaviors. How have their behaviors changed in the last 90 days or so?
So, and it's funny you mentioned the change in administration, and that has had an impact in how the deals are structured. So for the most part, in terms of buyer expectations, I think what has changed specifically in the past month or so is the new SBA guidelines actually changed from what they used to be. And buyers are now required to put an injection of 10%, where before, there was a little bit of a lower expectation in terms of the injection that buyers had to put in. Buyers were allowed to inject only a 5% injection as long as the seller was willing to do a 5% injection seller note with a 2-year standby. The new SBA guidelines don't allow that anymore. And so now buyer expectation is definitely to put down a full 10% injection. So I think that has changed the inflow of buyers that maybe don't have a lot of liquidity. And now you're getting buyers that have a more stronger liquidity, and then they're also going to be the ones operating the business. So before you had a little bit of buyers that were collecting injection from other investors and maybe finding operators. It is changing in the sense that now I feel like buyers are more committed. I feel like they need to put more skin in the game, and they feel more obligated to operate the business and be more hands-on. So I think that's been the major change in the past, I would say month and a half. due to the changes in the SBA guidelines.
Okay, that's good. That they're more committed then and getting more skin in the game. So, are you noticing any recurring red flags that are killing deals early in the process?
That's an interesting question. Nothing new, no new red flags that I had not seen in the past, other than your standard red flags where initially buyers typically just get like a P&L and some sort of recast of the business. And then once you get the actual tax returns when we're ready to submit the deal to underwriting, they don't really match and there's a lot of discrepancies. So those are things that you just see overall. Add backs, adding back non-recurring items or non-standard business expenses. I have seen where in the recast or in the P&Ls, you'll see an expense and then buyers will ask the seller to provide documentation and they weren't able to provide it. So that's definitely a pretty good red flag. In terms of me looking at red flags, buyers coming in looking for businesses or trying to buy a business without any direct experience, that will kill a deal real quickly when it goes in underwriting. Having bad credit, a lot of personal debt, but that's more in the sense of when we submit the deal to underwriting, what kind of red flags do I look for? And those are the ones that lack of experience, bad credit, not having enough liquidity, having buyers come in with strictly a 10% injection and not having enough post-closing liquidity to support the deal after closing. So that would be it. But generally speaking, it's just, same as usual. No major changes when it comes to red flags.
That's a good sign. It's not nothing like the tariff situation, very impactful it sounds like, or any kind of
nothing really
friction around the interest rate. So that's good. That's very good. That's
And one thing I would say that I thought we were going to have a major impact, especially not so much this year, but in the past 2 years when rates increased substantially. I thought we were going to have a major slowdown in business acquisitions due to the high rates. But I have found that people not that they don't care about it, but it's not as important to get a high or low rate as long as the margins are what they're looking for and the net income and the seller discretionary income is what they're looking for. They're willing to pay a high rate to get a business that generates a certain amount of revenue and net income for them. So that's what I've seen in the past. So, I will tell you that often enough, buyers won't even ask me about rate. They literally do not care as long as the bottom line is what they're looking for.
Yeah. And so that kind of swings into my next question is, is there any industry or maybe deal type that is really active right now?
Yes. I have noticed a high inquiry for home servicing companies, electrical companies, plumbing, HVACs, those types. I have seen a major increase in buyers being interested in those industries.
What do you think? Why is that? What do you think is driving that?
If I had to guess, they're kind of recession proof. I mean, homeowners, whether the economy is good or it's bad, if your air conditioning breaks, you got to fix it. If your plumbing breaks, you got to fix it. If you have an electrical problem, you can't live in your house without electricity. So you're going to get that constant recurrent revenue regardless of what the economy is. The only concern with that I've seen too, and specifically with the SBA, you need the buyer pool. It has decreased a little bit on those because of the licensing need for certain industries. So before, buyers were able to retain a seller for a certain amount of time or forever, really, if they retain equity. But the new administration made it, or the new SBA guidelines made it so that if the seller decides to retain any equity, they will have to guarantee the full amount of the loan. And guess what? Nobody's going to do that. If you're only retaining a 5% equity, they're not going to guarantee a $4 or $5 million loan when they're only on the hook for whatever, $250,000, $300,000. So that we'll see how that pans out. But that has slowed down a little bit because buyers used to be able to use the seller's license in order to run the business. But if the seller's no longer there, then they're going to have to find a partner or somebody that's willing to come in and provide the license.
Interesting hurdle there for sure.
Yes.
So let's go a little bit more macro. What is one piece of advice maybe that you're giving clients more often this quarter than you were in the previous quarter?
Yeah, for me, and I give this advice pretty much every time I'm dealing with clients and buyers is understand the deal, understand the deal structure. Don't go into a business that you don't have any experience, because like I mentioned earlier, I've done, especially in the past 3 years, I've done over 150, $60 million in transactions. And I will tell you that I have seen it all. And the one thing that I see buyers struggle is they go into a business that maybe they don't have a lot of experience, and they don't negotiate up front that maybe the seller staying for 6 months to a year to help them transition the business, and they think they can figure it out real quick because they're really smart. And so I will tell you, most of the time they are. It's just a learning curve. It's sometimes maybe too steep. And by the time they learn the business, they're behind in their payments. They couldn't figure out the project, and then the deal ends up, falling apart. So my major advice to buyers would be to really understand the business and what they're getting into. Understand the structure to mitigate certain risks. If you see there's any risk with a seller note or a forgivable seller note, or again, negotiate the seller staying for 6 months to a year to make sure that there's a smooth transition, and you get to understand how the business works, your employees, the clients, and how do you manage the business. So that would be my major advice. And then secondly, don't rush into closing just because you have a deadline to close. Do your due diligence, take your time, ask the questions and don't worry about what the seller thinks or the broker thinks. Because I tell people all the time, there's no return policies for these type of transactions. Once you buy the business, it's all you. So you want to be 100% sure that this is a good fit for you and for the business. So that would be my major advice.
I really like that first part too, as far as doing, making sure that the previous owner stays on for a little while. I think that would be really applicable and useful too when it's a difference generationally.
Yes.
If you've got a boomer or even Gen X and they're passing the business to a younger owner, I think that learning curve could be pretty steep, especially with how business is changing too. So I can appreciate that for sure. I like that.
Absolutely.
So let's look forward now. Let's get the crystal ball out. If you had to bet on one shift in M&A that's coming next, what would it be?
I would say, and I might have mentioned it earlier, there's going to be, from the past at least 2 years, because of the new guidelines, there's definitely going to be a transition of the type of buyers that we used to get to what we're getting now. And I feel like we're going to get a more seasoned, experienced, better liquidity type of buyer for business acquisitions, much so more than the searchers that we used to get a lot of those. And now it's SBA is making it a little bit harder to finance a transaction where you're not going to be the operator, but you hire an operator and then you get equity from certain investors and kind of decide to run a business like that. I think that that's going to change a little bit. And then again, we're going to get more of the operator type of buyer compared to the searcher that used to get that. And I hope the second change that I hope that happens is that they do change the not so much the equity injection. I'm okay with that. I think that's fine. But they honestly should let the seller retain equity, and not having to guarantee the full amount of the note if they're only retaining a 1% or a 5% equity. Just because I feel like overall for the long term of the business, it is beneficial for both parties.
Yeah, I think that's probably something they'll have to look at and make an amendment to. I think you're on the right track with that one. Samuel, I appreciate your insights, your time. I think that's very useful stuff. For those of you that are watching, hopefully you find this useful as well. You can find more insights from our Deal Pulse on our social channels on YouTube and LinkedIn, as well as our website, thevantgroup.com. Samuel, thank you so much, sir.
Awesome. Thank you, James. Appreciate it. Thank you for having me.